Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Wednesday, July 23rd, 2014. Take a look at the markets like we normally do. Last 2 days of trading indicators. We're going to look at the BRICS countries. We're now adding South Africa to this because that's the way these countries look at themselves. There's 5 in there, not 4. Then we're going to look at 5 Chinese stocks that were the most active stocks today. Okay, so the Dow Industrials was down almost 27 points today, but the interesting thing is that we're still trading within the range of last Thursday's big sell-off with on the Ukraine news that jetliner was shot down. So we're still within the high and low in here. Now that's the way it is on the Dow. The S&P 500 is a little different. It is trading a little bit higher, pushed up yesterday. We got a little doji bar today. But the divergences are still there. I mean, we are not confirming the move of the price action at all. So when you look at this, blow it up a little bit. This was yesterday's move, and we went up here. And today, I think we've actually closed at a new all-time high, 1987. Wow, hope that's not an ominous foreboding of some kind. Because 1987 was not a great August through October. Okay, let's see. Yes, it was a new all-time high. All right, the NASDAQ pushes higher the last 2 days, and we've broken this little trend line. But again, not very strong bullish bars in here whatsoever, and we have not pushed above this previous peak in here. So it's like we're struggling with the move. So we'll see whether or not it can get any steam behind it or not. I saw Facebook was trading up after hours today. I didn't actually catch the report or anything this afternoon. Oh, I don't want to do that. Let's take a look. The next one we're going to look at, actually going to move right to the indicators. There's really no, I mean, when you go back, there's no real change in my perception of what's going on. We've got divergences happening. Yeah, the other indices are pushing up slightly. The Dow's not confirming that. So we're not getting any further signal. We're just continuing to have the same trudging along that we've been having for weeks now. Short-term trading index, instead of going down to an extreme, has pulled back up a little bit. So no extreme reading. The CBOE volatility index, VIX, has drop back down, of course. As the market gets quiet, this drops back down. Now, it hasn't gone to a new low, so we're just going to have to see. The moving averages haven't crossed yet. We still got the 10 above the 21. So we'll see if this is a continuation of a little pullback, and whether this is the big move that kicked us off. Right now, we're having a hard time getting anything going. High-low index, yesterday was a kick up to the upside, a little bit of a pause back here today. We're right back to where we were on the 14th, which was a Monday. Yeah. Monday of the week ago Monday. Okay, so again, we're just kind of hanging right down in here. No new indication. Okay, the high-low. Now we're gonna jump in and take a look at the BRIC countries. Let's take a look at Brazil. Brazil is continuing to rally. A little pullback today, but really nice move that's happened over the last week. Looks like we're in a solid breakout in Brazil. Russia, on the other hand, of course, because of the nice activity going on in Ukraine, and the Russians. I don't want to say it. I almost wanted to say they're involved in the shoot down. We don't have that confirmed yet, so we'll have to wait and see what happens. But the stock market's not too happy about what's going on. Surprise, surprise. And so where did it start to get resistance? Right up in here where I talked about the previous overhead activity was. Okay, the next one is India. I love the way it goes right and knows exactly what I'm going to talk about next. I don't know how it does that, but anyway, India is continuing to push higher. I think we're in a fifth wave. I think we're in a third of the fifth. So right now that's continuing to play out and continuing to push higher. Looks very nice. Just a really nice move that's curving up. The next one is China, Shanghai composite. Now, what's interesting about the Shanghai is that, we've had these times where you could have just broken right down through this trend line, and it's gotten strength in here. So the buying has come in, and over the last week, it's broken out to a high and actually broke slightly today this trend line to the upside. Now, it didn't close above it, which is what I would like to see. But in the intraday high, went right about to the intraday high of this, may have gone slightly above it, but it's pretty close. I mean, so really, some resistance came in. So it's going to be interesting to watch this move. And the real test, it gets above this trend line, but then does it break this big trend line, which is a bigger down trend line. So it's definitely starting to get some legs underneath it, though. That's what's interesting about it. Okay. And then the last one, and I mentioned this in the post, is the South African, the FTSE JSE, and I'm not really sure. I have to look to see what JSE stands for, South African All Share Index. Now, this is going to blow your mind. Take a look at this. Okay. From 2008, we had this sell-off, 2009, the Great Recession. They come back and they just go blowing right through the high here in 2012 and just keep like rocket engine, just blasting right to the, continuing to go high, just trending and trending and trending. So this is what's going on with South Africa, and it looks pretty solid and looks pretty strong. And I have no idea what's going on in terms of the dynamics with the country or, anything else in terms of the internals and the economy and that type of thing. But if this is any indication, which it is, they've really got things starting to work down there. So that's great. Okay, so that's the BRICS countries. The one last thing, since we're talking about on a global basis, we'll take a look at the Baltic Dry Index. Now, here's from 1998, and I've talked about the Baltic Dry Index before. Clearly, this is an indication of global economic activity and strength of that activity. When the price of the dry index rises, demand is going up, okay? So then in like 2000, 2001, here was the, 9/11, and then it bottomed shortly after that, and then it started climbing. Even though the stock market didn't bottom until over here like October 2002, this started rallying, and then it had little pullbacks, but clearly almost like a 5 wave up, and then it peaks over here in like June of 2008, actually the end of May 2008, and then it falls off the cliff with the Great Recession. Well, okay, where's the economic rally? Where's the global economic rally? And look where the price is right now. We're back down here almost to the point of the low in 2008, which we came down to in 2012 twice. So this really, it sits back and really makes me wonder, what is going on? What is this telling us? Why is this acting the way it is? So it's something I'm really curious about. Don't have the answers, except it does make me wonder, is there a big disconnect? Is it just money sloshing around in the stock indices, in the stock markets of the world, because of the amount of money that's being pumped into the system, and the global economic activity isn't really there? I'm not sure, but this kind of picture would kind of say that might be the case. Now, oil price is a part of this, okay, but the price of oil isn't off this dramatically from where it was in 2008. Yeah, oil peaked at $150 or so, somewhere around that a barrel, and it's down a third from that. It's around $100 a barrel now, and I haven't looked at it lately, but it's not down here. Okay, so that's pretty dramatic. It's a pretty dramatic picture of what's going on in the world economy. All right, let's take a look at the 5 most active Chinese ADRs that are traded in the United States today. I'm going to start off with SoFun holding. Okay, it was the most active. It looks like we've had 5 waves up. It had an extended 5th wave. It looks like here's 1, 2, 3, 4, and 5. And now we've had this pullback, and it's pulled back about 61.8% of this entire move. Okay, so that's what when I looked at this, what I do is you grab this from here and you take it to here, and when I'm using the retracement, Fibonacci retracement, and then it creates these dotted lines for me as to the pullback. Well, it did almost a 61.8%, and so now it appears to be getting some legs underneath it. It's broken the trend line that's down here. You've got the 10 above the 21. They're curving higher. Granted, everything, we're still below the 55, except the price is not. The price has jumped up here. We're still we're below the 233, but that's okay. I mean, you're breaking the trend line. You got to turn. You can't just, everything can't happen all at once. It's going to be interesting to watch this because this looks like it's trying to turn, and it may have put in a low here. This may be enough. So that's interesting on SoFun. We'll have to keep watching that. NQ Mobile. Where is NQ Mobile? NQ Mobile is the one that had that huge disaster back in October. The big sell-off, and then now it's bounced back. This almost looks like a, let me get my, I mean, this looks like a, a wave, like an A. I'm not going to be able to do that very well. I can't type with this thing. And this is B, and then this is C. Now the interesting, let me show you something else on this that I looked at earlier. When I look at Fibonacci projections, and you start at the beginning of what looks like A, and you go to the bottom, then you go up to the start, the end of B. Now it projects out where C may go. Well, here's where C equals 100% of A, and this has gone just slightly beyond it. Now, pictorially, it doesn't look like it's equal, but point-wise, it is. Okay, because this low here is 7.58, and this high was 25.90. Okay, so we're talking about what, 18 points? Well, 18 points from here is going to put you at 4 something, and where are we? This is 4. Okay, so yeah, this is accurate. That's because this is a semi-log chart. Remember, everything is percentages in here in terms of the picture. So this could also be have gone enough, although I'm a little wary. These are very sharp bear market rallies in here. You're going to need more than this to say, okay, it's ready to go. So it'll be interesting, again, to just watch and see. We're probably going to get a pullback and then another rally again. I mean, nothing goes up straight line. It's going to do one of these kind of things. So we just have to watch, but it may have corrected enough. Okay, the next one is Candy Technologies. And I'm watching my clock here. I don't want to go too long. Candy came up here and hit the high back here in March, and so we kind of hit that high almost exactly to the penny, a little bit off a few pennies, but and then all of a sudden the selling comes in reverse. So had a big down day today percentage wise. It'll be interesting I think this is probably going to pull back, and it'll be interesting to see if it tries to do some kind of cup and handle move, like, well, this one didn't quite work out that way. You see how this one did, and then pulled back, and it wasn't quite ready. It was almost like this was on a bigger basis, almost like this was the cup, and then this was the handle. Okay, and then you could sit back and make the case that it looks like a little bit of a coffee cup. Okay, but it's cup and handle is an interesting idea. It's not one of the traditional chart patterns I typically am looking for constantly. I'm always looking for trend lines. I'm always looking for this kind of back and fill, this trend line and an up thrust to it, especially when the moving averages get aligned. So that's just a common thing you should always be looking for And right now, we watch to see what kind of pullback do we get. If you're playing this, you'd want to probably look at what the percentage pullback might be, and then watch to see if it gets legs maybe here at the 21 moving average. Let's see. The next one is Yangling. Where is it? Yingli Green Energy Holding. Okay. This is interesting in that it may be putting in a bottom, and this was the picture that jumped out to me here, in that it's a possible head and shoulders, although I must say this neckline being this weak never gives me a very warm and fuzzy. I mean, I don't feel really confident about that. I'd rather have a neckline that is much more horizontal to play. But that doesn't mean, and we could have something else even going on now that I look at this. I mean, you could almost say that you've got a little bit of a triangle action that's going on, and if you break this trend line, you pop on up. I would expect that you might make a run up here to the 233-day moving average. So we'll have to watch and see the action. It's breaking above the 10, and you've got the 21 above the 55. So it looks like it's trying to turn. Take a look at the indicators real quick. Indicators have gone positive. The RSI is over 50. DI plus is greater. DI minus. The demand index is positive. So it looks like it's trying to make a move here. It's a pretty low price stock, $3.56 a share. And the last one we're going to take a look at is New Oriental Education, and this one is plunging through the floor. Okay, here's the whole picture on New Oriental. Okay, here's all the trading since 2006. Now you notice it came to this peak right here, and then it came to that peak right again, and then all the sellers came in. Because everybody who bought back in here said, wow, you give me a chance to get out even, and I'm getting out. And so that's exactly what they did. And so now as you look at this rally, just from a technical standpoint, the first thing I thought is, okay, let's draw some trend lines. And right in here, then all of a sudden you start to look like you're getting a little bit of a shoulder, head, and shoulder. And now you've broken this neckline, and this move in here, this head projects down to here, okay? And it's interesting that when it projects down to here, that's exactly where they got support before. And so that's the play I think is going on in here. And where you could have gotten a little bit of a heads up is when you looked at drawing trend lines from a previous pivot point, like in here, and here's another pivot point, and you draw a trend line, it broke it. You draw another trend line, it broke it. You get a pivot point, you draw the trend line again, and it's actually ends up being this neckline, and now it's smashed right on down through it. So trying to jump in, and isn't it an extreme? Yes, but this would be like catching a falling knife. I mean, really, that's a great way to get your fingers cut off or get injured pretty badly. I mean, there is no divergence going on. Now, see how you got divergence in here? How you went to a lower low on the price, but the RSI did not? That would give you a reason to say, well, maybe that's a lower risk entry, and I try to get on board, and then it rallied back for a ways. But this is not giving you any kind of indication. For all we know, this is going to continue gapping on down. I mean, I don't know. I don't know what the news was on New Oriental Education. All I know is it doesn't look too good. So, all right, that's it for now. Kind of a long video tonight. We covered a lot. This is Joe with Beyond the Chart. And if this video helped you in any way, please share the video. You know, you can actually, just I guess the best way is just social media icons. Just, click those, tweet it, and subscribe if you haven't subscribed, and share it with your friends. So I will be back on Saturday. We'll talk again, take a look at the market, and look at trade ideas, and we'll go from there. Have a great Thursday, Friday, everyone. This is Joe for Beyond the Chart.